Did you see respected Wall Street analyst Tom Lee on CNBC with Kelly Evans the other day? He basically spilled his guts on the state of the market. He sees nothing but green lights ahead and thinks we are in for a huge rally into the end of the year. In the video, which I'll show you in a moment, Tom Lee thinks Fed Chair Powell's comments did catch a lot of folks by surprise. Lee suggested that it was his view that the market wanted to hear that the Fed is viewing tariffs as possibly transitory because this puts them in a position to intervene if labor markets start to weaken. He also thinks the market is now showing increasing signs that we are at a tradable bottom. Well, I'm here to tell you that I agree with Tom Lee, and I've got 3 stocks that you need to consider adding to your portfolio right now to take advantage of this bull market. These are companies that are at the forefront of innovation and industry leadership. We're talking about a leader in industrial solutions, a pioneer in vital resource management, a giant in defense technology, all poised for massive growth. These aren't just stocks, they're your ticket to a brighter financial future. If you only watch one video today, make sure you watch this one, all the way till the end. I'm going to break down exactly why these 3 companies are poised to explode in the coming months. Hit the like button, let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. And subscribe so you don't miss out on the next important financial investing update. Today's video is sponsored by my good friends at Forecaster Terminal, the best stocks analysis software I use in finding these incredible stocks. More on that later. Let's hear what Tom Lee has to say in his own words.
How do you interpret the Fed's move yesterday? Welcome.
Well, I think markets were positively surprised by the Fed's move, in part because recent staff papers from the Fed had argued tariffs would actually be multi-year inflationary effects. So Fed Chair Powell's comments yesterday, I think, did catch a lot of folks by surprise, just because it is a view that markets probably want to hear, that they'd like to hear that the Fed is viewing tariffs as possibly transitory because that puts them in a position to actually intervene if labor markets start to weaken. And in fact, that's evident in the S&P because 90% of Fed staffers now see not only risk to growth, the GDP growth forecast, but it was 90% seeing it as downside risk.
Steve, would you agree with that characterization, or how do you think the Fed or Goolsbee or a member like that might respond to the idea that they're still at the ready to support the economy?
They're at the ready to support the economy through keeping rates where they are right now. He kind of took off the table, or never has put on the table, this idea of hiking rates. I think it's a difficult and very interesting dance the Fed has to do here. I think there's an argument, and people I've talked to have supported this, of the Fed talking tough right now about inflation to make sure and play a role in the idea that the tariffs do not become a broader inflationary, have a broader inflationary effect, but then being ready as needed to address the downside. Right now, it seems like because Powell feels like he's restrictive enough to deal with that inflation problem, that all the talk or the leaning here is addressing the potential negative effects of the tariffs and the idea that they both brought down their growth forecast while they raised the inflation forecast. If this were the Volcker Fed or the Volcker idea, Kelly, you would say that Paul Volcker would be addressing the inflation problem and then get to the growth problem.
Right, and Powell repeatedly says Volcker's the Fed chair that he kind of admires the most.
Yeah.
Granted, the inflation back then was very different than what we're dealing with now. Tom, even as the markets are digesting what Steve said, this kind of lower growth, stickier inflation environment, and not taking it all that well, what are the other positive signs you're seeing for stocks this week?
Well, I think that the sort of the big elephant in the room has been the absolute fear that has become systematic in markets around April 2nd and the tariff deadlines. And I think that there have been little hints this week that instead of April 2nd being the date of some sort of annihilation of trade relationships, that we may start to see either deals before then or even delays in implementation. And I think that really investors are going to breathe a sigh of relief because, as you can tell, pessimism has become very pervasive because of the fears of what will happen on April 2. So I think that's a positive. And then the other is, and it's really a technical perspective, but Mark Newton, our head of technical strategy, has pointed out there are increasing signs of that we've actually established a tradable bottom. And that's not only the fact that we declined so quickly, but it's that market breadth has really been expanding and then actually following through in a way that looks like this is not a 10% decline that's leading to a 20%, but a 10% waterfall decline / heart attack for stocks driven by rage selling, and now it's tradable.
So those would be a couple of big positives, kind of technical signs, maybe April 2nd, because I've seen that reporting too, where they're, the White House evidently working with trading partners, trying to get some stuff dialed back before April 2nd and so forth. What else, Tom, do you see that encourages you?
Well, I'd say that probably the final thing that I've seen is, and this is really from our meeting with clients, is that we know there's actually quite a lot of dry powder. Many of our clients have raised a lot of cash. I mean, it's also evident in a lot of the money market balances or prime brokerage de-risking that's taken place. And it's at a time when investor sentiment has moved far more than is justified by the market moves. Whether you look at AAII or Investors Intelligence, both have registered recession-like readings in sentiment. And so it really creates the room for positive surprise. And that, again, I think it like what you just said, if tariff headlines aren't as bearish, and if there's all this last-minute work on negotiating something, and yesterday there was a tweet about how into the night Hessett and Lutnick and Bessent were working on a trade deal that got so little notice. I think it just tells me markets could be positively surprised.
All right, folks, let's talk about Ecolab, ticker symbol ECL. This company might not be a household name for everyone, but it plays a crucial role in our everyday lives. Now, I know what you're thinking. Ecolab, what do? Are they just another soap company? They make soap? Well, yeah, they do make soap, but that's like saying Apple just makes phones. Ecolab's scope is far broader and more impactful than you might initially think. Ecolab is the global leader in water, hygiene, and energy technologies and services. Their mission is to make the world cleaner, safer, and healthier by providing and protecting what is vital: water, food, health, and climate. They're not just cleaning your hands, they're cleaning up in industries like food processing, healthcare, hospitality, and more. Imagine the scale of operations required to maintain hygiene in a hospital or ensure food safety in a processing plant. Think about it. Every restaurant, every hotel, every hospital needs to keep things clean, right? Ecolab's solutions ensure that these places meet the highest standards of cleanliness and safety. And Ecolab is there, providing the solutions to make it happen. Their team of experts works tirelessly to deliver customized solutions that address the unique challenges of each industry. They're not just selling products, they're selling efficiency, sustainability, and peace of mind. Their comprehensive approach helps businesses operate more efficiently while reducing their environmental footprint. They're helping businesses save money on water and energy while keeping their operations squeaky clean. This dual focus on cost savings and sustainability is a win-win for their clients. But here's the kicker. Ecolab is also a leader in innovation. They are constantly pushing the boundaries to develop new technologies and services that meet the evolving needs of their customers. They're constantly developing new technologies and services to meet the evolving needs of their customers. Their commitment to innovation ensures that they stay ahead of the curve in a rapidly changing world. They're investing heavily in research and development, and they're not afraid to disrupt the status quo. This forward-thinking approach has positioned them as a leader in their field. They're not just riding the wave, they're creating the wave. Their innovative solutions are setting new standards and driving progress across multiple industries. Now let's talk numbers. Ecolab boasts a market cap of $71.3 billion with earnings per share at $7.42 and a price-to-earnings ratio of 33.95. The company generated $15.74 billion in revenue in 2024, with a net income of $2.11 billion and a dividend yield of 0.97%. Despite a current trading price of $251.94, it's still undervalued by about 4%, compared to its fair value of $262.17. This isn't just a profitable company, it's an ethical leader. Ecolab has been named one of the world's most ethical companies by Ethisphere for 19 consecutive years. That's a rare distinction, underscoring its commitment to integrity in business practices. The company continues to benefit from a strong product portfolio and diverse revenue streams, contributing to long-term growth. And for investors, consistency is key. Ecolab has paid a quarterly cash dividend for an astonishing 88 consecutive years, currently standing at 65 cents per share, with a solid profit margin of 16.33%, a high return on equity at 24.12%, and a moderate debt-to-equity ratio of 0.86. The company operates with efficiency, strong capital management, and a balanced risk approach. Looking at the bigger picture, Ecolab remains a leader in its industry, outperforming competitors like Diversey Holdings and Clorox. With a strong Altman Z-score, Piotrowski F-score, and Beneish M-score, it demonstrates financial health and low risk of earnings manipulation. Analysts agree that Ecolab's efficiency, buyback strategy, and competitive edge make it a solid investment for long-term value creation. They've got a strong track record of growth and profitability, and they're well positioned to continue that growth in the years to come. Their consistent performance makes them a reliable choice for investors. They're a dividend aristocrat, having increased their dividend for over 25 consecutive years. This commitment to returning value to shareholders is a testament to their financial stability and long-term vision. That's right, folks, they pay you to own this stock. The steady dividend growth is a great incentive for long-term investors looking for reliable income. But don't just take my word for it. Analysts are bullish on Ecolab, with an average price target of over $200 per share. This optimism is based on their strong fundamentals and growth prospects. That's a potential upside of over 20% from current levels. With such promising projections, Ecolab is an attractive option for investors looking to capitalize on future growth. And with the global economy reopening and businesses ramping up operations, Ecolab is perfectly positioned to capitalize on the increased demand for their services. Their comprehensive solutions will be in high demand as industries prioritize hygiene and safety. So there you have it, folks. Ecolab, a leader in a growing industry with a strong track record of innovation and profitability. Their comprehensive approach and commitment to excellence make them a standout player in their field. This is a stock you can buy and hold for the long term. Their consistent performance and growth potential make them a solid choice for any investment portfolio. Don't miss out on this opportunity to clean up with Ecolab. Their innovative solutions and strong market position make them a compelling investment for the future. Let's move on to our next stock, Ingersoll Rand, ticker symbol IR. This company has been a cornerstone in the industrial sector for over a century, and its influence continues to grow. Now, Ingersoll Rand might not be a household name like Ecolab, but its impact on the industrial world is monumental. But trust me, they're a powerhouse in the industrial world. Their machinery and technologies are the backbone of many essential industries. They're a global leader in mission-critical flow creation and industrial technologies. This means they provide the essential components that keep industries running smoothly. In other words, they make the stuff that makes other stuff work. From the smallest components to large-scale machinery, their products are indispensable. We're talking compressors, pumps, blowers, vacuums, and more. These are the unsung heroes of the industrial world, ensuring that everything operates efficiently. Their products are used in a wide range of industries, including manufacturing, food and beverage, pharmaceuticals, and energy. Each of these sectors relies heavily on Ingersoll Rand's technology to maintain their operations. If it needs to move air or fluids, Ingersoll Rand has a solution. Their expertise in fluid and air management is unparalleled. But here's what really excites me about Ingersoll Rand, their commitment to sustainability and efficiency. In today's world, these are not just buzzwords. They are essential for long-term success. They understand that the world is changing, and they're investing heavily in developing products that are both environmentally friendly and cost-effective. This forward-thinking approach sets them apart from many competitors. They're helping their customers reduce their carbon footprint and save money at the same time. This dual benefit is a significant selling point for their products. For example, their new line of energy-efficient compressors can reduce energy consumption by up to 35%. This is a game-changer for industries looking to cut costs and be more sustainable. That's huge. Not only is it good for the environment, but it also saves businesses a lot of money on their energy bills. These savings can then be reinvested into further innovation and growth. And with energy prices on the rise, that's more important than ever. Companies are constantly looking for ways to mitigate these costs, and Ingersoll Rand provides a viable solution. Now let's talk financials. The company commands a market cap of $32.92 billion. It posted an EPS of $2.08 and a PE ratio of 39.26 with $7.24 billion in revenue and $838.6 million in net income in 2024. Currently trading at $81.67, it's undervalued compared to its fair value estimate of $88.99. Sustainability is a major focus for Ingersoll Rand. The company received an A-list rating from CDP for environmental stewardship, ranked #1 globally in its industry for sustainability efforts, and was included in Time's list of the world's best companies for sustainable growth. For investors, the company continues to return value, declaring a quarterly cash dividend of 2 cents per share. Financially, it maintains a strong profit margin of 15.66%, with a return on equity of 8.24%. Most notably, its debt-to-equity ratio stands at 0, showcasing a rock-solid balance sheet with no reliance on debt financing. When assessing overall financial strength, Ingersoll Rand remains a resilient player, backed by a high Altman Z-score, a stable Piotrowski F-score, and a low-risk Benish M-score. The company's capital efficiency and strong market presence, especially compared to competitors like Atlas Copco and Parker Hannifin, position it as a valuable long-term investment. They're consistently profitable and they've got a strong balance sheet. This financial stability allows them to invest in new technologies and expand their market reach. They're also committed to returning value to shareholders through dividends and share buybacks. This commitment makes them an attractive option for investors looking for both growth and income. Analysts are bullish on Ingersoll Rand, with an average price target of over $70 per share. This optimism is based on their strong performance and future growth prospects. That's a potential upside of over 15% from current levels. This kind of growth potential is hard to ignore, especially in a stable and established company, and with the global economy recovering and industrial production increasing, Ingersoll Rand is well positioned to benefit from the growth. Their products are essential for the infrastructure that supports economic expansion. So, there you have it, folks. Ingersoll Rand, a leader in industrial technologies, with a commitment to sustainability and efficiency. Their innovative approach and strong market position make them a standout in the industry. This is a stock that can power your portfolio for years to come. With their focus on innovation and sustainability, they are well equipped to navigate the challenges of the future. Don't miss out on this opportunity to ride the wave of industrial growth with Ingersoll Rand. Their proven track record and future potential make them a compelling investment choice. Alright folks, let's talk about a company that's literally out of this world, Northrop Grumman, ticker symbol NOC. This is a company that has its roots deeply embedded in the defense and aerospace sectors, but its reach extends far beyond just making weapons. Now, I know what you're thinking. Northrop Grumman, they make weapons, right? Yes, they do, but that's just scratching the surface of what this powerhouse is capable of. Well, yeah, they do make weapons, but they're much more than just a defense contractor. They are a beacon of innovation and technological advancement in multiple fields. They're a global leader in aerospace and defense technology, with a hand in everything from fighter jets to spacecraft. Their expertise spans across various domains, making them a versatile and indispensable player in the industry. We're talking about the B-2 stealth bomber, a marvel of modern engineering that has redefined aerial combat with its advanced stealth capabilities. The James Webb Space Telescope, a groundbreaking project that promises to unlock the mysteries of the universe and expand our understanding of space. And the upcoming B-21 Raider, which is set to be the next big thing in stealth technology, pushing the boundaries of what's possible in modern warfare. They're on the cutting edge of innovation, developing the technologies that will shape the future of defense and space exploration. Their R&D efforts are second to none, constantly pushing the envelope to create groundbreaking solutions. They're not just building weapons, they're building the future. Their work in advanced materials, artificial intelligence, and quantum computing is setting the stage for the next generation of technological advancements. But here's the thing. Northrop Grumman is also a leader in cybersecurity, autonomous systems, and other high-growth markets. Their cybersecurity solutions are among the most advanced in the world, protecting critical infrastructure and sensitive data from cyber threats. They're not just focused on the traditional defense market, they're diversifying their portfolio and positioning themselves for long-term growth. This diversification strategy ensures that they remain resilient and adaptable in a rapidly changing world. For example, their cybersecurity division is one of the largest in the world, providing services to governments and businesses around the globe. This division is crucial in an era where cyber threats are becoming increasingly sophisticated and pervasive, and their autonomous systems division is developing the next generation of unmanned aircraft and vehicles. These innovations are not only enhancing military capabilities, but also have potential applications in commercial sectors. They're not just following the trends, they're setting the trends. Their pioneering work in various fields is setting new standards and paving the way for future advancements. Now let's talk financials. Northrop Grumman is a defense giant with a market cap of $70.82 billion. The company delivered a stellar performance this year, reporting an EPS of $28.39, a PE ratio of 17.23, and a dividend yield of 1.68%. Revenue stands at $41.03 billion, with a net income of $4.17 billion, despite its current share price of $489. 23. The stock remains significantly undervalued by over 26%, compared to its fair value estimate of $616.89. Northrop Grumman continues to win major defense contracts. Recently, the company secured a contract to supply precision guidance kits to the U.S. Army, supporting a decade-long partnership. It also won a $267 million contract to provide spare parts for the MQ-4C Triton unmanned aerial system for both the U.S. Navy and the Australian Defense Forces. Additionally, it was awarded a contract to support Lebanon's Air Force C-208 aircraft, strengthening its global defense collaborations. Recognized as one of the safer stocks during market corrections, Northrop Grumman's fundamentals remain strong. The company maintains a profit margin of 12.22%, a return on equity of 27.3%, and a conservative debt-to-equity ratio of just 0.12, demonstrating financial stability and low leverage risk. From a valuation standpoint, Northrop Grumman appears significantly undervalued, backed by strong fundamentals and steady government contracts. The company maintains an impressive competitive edge, scoring an 0.8 in industry rankings against major players like Lockheed Martin, Boeing, and Raytheon Technologies. With stable earnings, a resilient buyback strategy, and limited insider activity, Northrop Grumman remains a solid long-term investment in the defense sector. They're consistently profitable, and they've got a strong track record of growth. Their financial stability and consistent performance make them a reliable investment. They're also committed to returning value to shareholders through dividends and share buybacks. This commitment to shareholder value is a key reason why investors have confidence in Northrop Grumman. Analysts are bullish on Northrop Grumman, with an average price target of over $500 per share. This optimism is driven by their strong financial performance and strategic initiatives. That's a potential upside of over 10% from current levels. With such promising prospects, it's no wonder that Northrop Grumman is a favorite among analysts. And with global defense spending on the rise and the space industry booming, Northrop Grumman is well positioned to benefit from the growth. Their strategic investments in these high-growth areas are expected to yield significant returns. So there you have it, folks. Northrop Grumman is not just a defense contractor, it's a technological powerhouse with a diversified portfolio and a bright future. Northrop Grumman, a global leader in aerospace and defense technology, with a diversified portfolio and a strong track record of growth. Their contributions to various fields make them a standout player in the industry. This is a stock that can take your portfolio to new heights. With their innovative approach and strategic vision, Northrop Grumman is poised for continued success. Don't miss out on this opportunity to reach for the stars with Northrop Grumman. Investing in this company means investing in the future of technology and defense. So, whether you're an investor looking for a solid addition to your portfolio or just someone fascinated by cutting-edge technology, Northrop Grumman is a name you should know. Reach for the stars with Northrop Grumman. There you have it, folks. 3 incredible companies, 3 fantastic opportunities to boost your portfolio. Remember, these are just a few of the many exciting investment opportunities out there. The key is to do your research, find companies with strong fundamentals and growth potential, and invest for the long term. If you're serious about finding winning stocks in seconds to skyrocket your portfolio, use Forecaster, the ultimate tool for uncovering high-value investments. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly, it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. The political tool tells you when politicians are buying or selling shares in a company. If you're serious about investing, this is the tool that can completely transform your portfolio. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code Galore10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. And as always, thanks for watching. Don't forget to hit that like button, share this video with your friends, and subscribe to the channel for more market-crushing insights. See you next time.